Hey, so welcome to the Spry Guys podcast. Why don't you join us as we cover some amazing topics around financial planning? The goal is to simplify and empower you as a client to build multi-generational wealth. So come join the journey.
Hey guys, welcome to episode 2, season 1. Granty, how are you?
Yes, Trev, I am good. I'm excited for today.
Yeah, it's going to be a good one.
It is.
We've got a good topic today.
Very relevant.
Today, guys, we're going to chat around something that is going to impact all of us, not only obviously in kind of our work environment and from a financial planning point of view, but it's actually something that's going to impact your pocket. Something that's really topical right now. It's a big week. It's a big week. Huge. There's a lot happening. And we're going to talk around interest rates and how that is going to impact you as a client and how that impacts us as consumers and our debt. Wonderful thing, and obviously our assets as well, and any sort of investments that we do have. Granty, good week so far?
Been good, been great. I'm really excited for this week. I think, as you said, it's topical, and I'm also, I think as many are, sentiment is we're going to have a little bit more money.
Relief.
I think we could call it relief. Amazing.
So I think, on Wednesday, the US Fed are meeting. We should have a decision there, which I think is a long time coming, right? And then we've obviously got SARB, South African Reserve Bank. They are meeting this week, and then announcements on Thursday afternoon. Around 2:30, 3 o'clock, somewhere around there. We'll see. Hoping for good things.
No, we are.
I'll get a prediction from you a little bit later.
100%.
And we'll see.
100%.
By the time this comes out, we'll see how we look and how close or how far off we were.
Amazing.
Should we dive in?
Let's do it.
Okay.
I'm
cool.
I'm excited.
Yeah. So thanks to our sponsors. No, kidding. This is not sponsored. But so Granty.
If you do, you can. If you want to.
So the repo rate, interest rates, prime lending rates, all of the different rates. Like we said, it impacts all of us dramatically. It can impact your savings, it can impact your debt, what we alluded to a little bit earlier. And I'm really excited how you're going to unpack this for us, because you're in the hot seat today. Okay.
The seat is hot, eh?
I'm firing away at questions
100%.
today. It's cold today, so we need this. So we're going to dive in. Granty, maybe for the guys who are not familiar with the repo rate and prime lending rate, maybe can you jump in and just explain that for us?
Absolutely, I'd love to. And I'd start with probably the repo rate. I think, what we believe also is spry, simplify and empower. So I'm going to try and make it simple today and not go into too much detail, because sometimes you lose people. But I'll try and make it simpler. So the repo rate, let's start there. I think in short, it's for repurchase rate. So basically, it's an interest rate which the South African Reserve Bank, so SARB, we're probably going to say it quite a bit today. We're going to shorten it because it's quite a mouthful. And so what they do is they increase or decrease rates, and it's the lending rate to the banks that have borrowed money from them. So basically, banks borrow money from them. And I think our SARB has done fantastically well.
Incredible.
From COVID to now, how they've just maintained, I think they've done an exceptional job. My opinion, that's our opinion, I think.
Agree.
And so I would also say it's a benchmark for interest rates in the whole economy. So how you were saying, it affects different things and affects our rate of lending, puts more money in our pockets sometimes it doesn't, sometimes it grows. And we'll get to, I got a question for you. You probably don't know it, but I'm gonna give you a question just now. But I just think it's the foundation of our financial system. It really is, because when they adjust it, it helps the economy. It can boost the economy, because sometimes if we're paying less for debt, we can spend more on other things, employ people, do all, because we've got more money in our pockets. Exactly. It can happen in the opposite way. So that's just, and that would affect your monthly bonds and repayments. And, we'll get into that now. But
we'll tackle that.
For me, that in summary.
Yeah. So I think it's exactly what you allude to. So it can be a positive or a negative, just depending on who you are at the end of the day and how you impact it. So this is the lever, if I can put it this way, this is the lever that the SARB can pull to manage inflation. So one of the things that I wanted to chat around, well, just to mention, is in South Africa, it's quite interesting. So our SARB has a single mandate, or sole mandate, let me use that word rather, when it comes to interest rates and what their objective is. So they will utilize, so SARB obviously being South African Reserve Bank, they will pull the lever of interest rates to either increase, to take a bit of heat off of the market, inflation's running through the roof, and I know you're going to chat about it, but the inflation's running a bit hot. They'll obviously pull the lever of interest rates, or they need to assist the economy a little bit. They might cut from that point of view. But that's SARB sole mandate is managing inflation. That is what they're going to do. It's quite different to the US. So the US Fed, who's going to announce their rates on Wednesday, they dual mandate. So that's quite interesting. Not only do they need to manage inflation, but they're also going to manage employment, or unemployment rather. They need to keep that down. So they've got to balance the two. So I'm curious to see what happens on Wednesday, because they might be excelling in one area and putting a bit of pressure on the global economy in another. But let's not digress. Let's control what we can control. Coming back to South Africa.
Absolutely.
Granty. So talk to us about interest rates. So exactly what you said. SARB will manage the repo rate, which in turn affects the prime lending rate, which the rates that me and you are impacted by when we lend from the commercial banks, if I understand correctly.
Yes. So basically, you've got your interest rates that so with the repo rate going up, SARB will increase that or decrease that. Banks now pay a little bit more. They have to pass it on to someone. Because we borrowed money from them. And it's a ripple effect, basically. And it can have, depending on your financial planning, because we'll get into that, but it can cause this ripple effect that goes into the market. And also, I think, it's like it can be cheaper or it can be more expensive. It just depends on what the banks pass on. And that's why it's so awesome when you get those lovely messages after the decisions that they've made, which is amazing. And I love that it's dual mandate for us. I mean, for the US, but single mandate for us. I think, when you get those messages, it's quite like, okay, well, and I mean, for an example, I'll use, and maybe I'll just jump into this question with you, is everyone's got a bond. Well, not everyone, but, you bought a house. A number of us. You bought a house. For me, I bought a house after COVID, built a home. My bond only kicked in when it was at the top. I don't know the difference, but Trav, in talking to you, you had a bond from when it was COVID, and what was it sitting at around there? It was about 7% on flat. We're sitting at 11.75. So what that means is that that's the interest rate, that's the lending rate.
It's gone up 4.75%.
Take us through how you felt in these Usain Bolt rises, because I love what he does there, because that's how it went up. So take us through just maybe, I think it's awesome for our listeners when you use simple examples like that. How did that make you feel?
Well, it's real as well. So we've lived it. So I think, we literally bought in the middle of lockdown. It was great from many different aspects. So we bought 7% was the that was prime lending rate. So that wasn't obviously repo. But so there, and then obviously it has escalated somewhat now to 11.75. So it's interesting. What it does do is, say you're paying a little bit extra into your bond, as an example, and you've built up a bit of cushion there. You only need to pay X, but you're paying X plus, and you try and pay off the bond a little bit quicker. What ends up happening is, through those that hiking cycle that we go through, it's no longer X plus, you're now just paying what you're supposed to be paying kind of situation.
Like, what's my affordability?
So, but no, so that's, but I am looking, and long story short, let me surmise it, I'm looking for the downward trajectory now. It's going to be good. It's going to be fun. So that's going to be helpful.
And I think like, I had an example, just to break it down practically for the listeners, is if you had to take a 20-year bond and you borrowed 3 million rand currently, 11.75 right now.
If you're at prime,
if you're at prime, you're roughly paying about 32,500 currently. Okay, so if we get a little, let's just say we get a 25 pips just a little bit of a cushion or
Little
a little,
shave. Little
just
shave.
a shave off.
Yeah.
How does it affect the listener? You know, you're dropping down to 11.50.
Yeah.
Roughly, if my maths is correct, it's about 600 Rand.
No, it's about 600 Rand in your pocket.
That is available to you to kind of, and so I think it's going to be helpful. I mean, just using that, breaking it down, it's going to be helpful for people. And that's where SARB has to manage this process.
Oh, it's so difficult.
So difficult.
It's so difficult. So just maybe let me jump, I know I'm jumping the gun a little bit here, but if someone had that 600 Rand saving, okay, let's say you've gone from paying 32.5, you're now paying 900. Let's just round off the numbers here. You got a $600 saving. There's what options do the guys have there with that extra money? Like in your case, do they pay off? Do they keep it at 32,500? Do they go add 600 Rand into your savings? Like what?
Yeah, so obviously, I mean, you need to sit with someone to view the whole picture. But I mean, if it's like, you know what most people don't understand is when you talk about the interest rate SARB, people just think the bank, when I chat to my clients, they just think, okay, well, that's the lending rate. They don't actually know and understand the whole side of things. So I would always say get financial advice. But if that is the case, so some people say, okay, I can take a bond and I've got 25,000 Rand to spend on my bond, or 20,000 Rand, or let's just call it 10,000 Rand. That's their figure. But you must realize that that's going to, over the 20 years, what we're talking about now is going to affect how much you're paying or how little you're paying.
Yeah.
So some people said, I can afford 10 grand. But those people that said that in 2021 or COVID,
it's such a good point.
Either have had to sell their house, or they've had to go and get extra debt or credit or something like that. So to answer your question, I would really look at it and say, if that's your affordability and it's dropping, I would probably stick and depending. I mean, this is.
There's pros and cons to each, right?
Yeah.
So everyone look at in your own circumstances. What
I would
you're
look at your higher debt. If you've got credit card debt, all that kind of stuff, I'd look at.
Yeah.
You know,
it's a good point.
Then coming to your home loan, but you know, if that's your affordability. For me, it would make sense just to keep paying that, pay your debt down quicker. I mean,
if you can afford it,
if
like
you can
said.
afford it, and but it's shaping and looking at those, and we'll get into those little things now.
No, but I think it's a good point. I mean, we're moving through it. It's my handy little notes over here, but I think other areas. So you've spoken a bit around the home loan side, but what are other areas in someone's personal life, in maybe our listeners and our clients' personal lives, where interest rates would affect them?
Yeah, so I think home loans is massive. It's going to be affected. We spoke about that now.
Yeah.
The other one is if we vehicle finance, you know.
Yes.
So vehicle finance is also linked to ups and downs, repo rate, interest rate, lending rate.
There's a lot of nice vehicles around at the moment as well.
Well, they are. And unfortunately, we do live in a fantastic space, which is Belito.
Yeah. And
so there are nice cars. Toyota's got really good cars.
Yeah.
I'm a Toyota fan. Toyota can sponsor if they want to. But just having said that, I think what can affect you is that if you're paying more, the problem with a vehicle is that I always look at it as it's a depreciating asset.
Yeah.
You know? So you pay more for your vehicle. And again, I use that simple example of, flip, I can afford 10 grand. So that people go and they borrow to that 10 grand. But remember, it adjusts according to what it is. And it can put you in a bad situation very quickly. So always,
I agree.
So always look at that. So that's one of the things. Credit card, you know, I always think the banks make it far too easier for us to lend money. And then it's about a psychological thing of when they've lent you the money, you've spent the money.
To unwind that.
You think it's yours, but it's actually never yours. And so you're paying higher rates. So for me, that...
And then you're just paying on that, sorry to jump, but you're paying on that for a time frame. Like I mean, you're going to be one of the fortunate ones, let's be honest with ourselves, if you get to pay that off in full, if we're talking, you know, decent numbers and those sorts of things. But what the reality is, most of the people, most of us, including ourselves, we're not special, and maybe just you, but most of us are paying that off over a period of time. And then what a lot of guys don't realize, and this is just trying to encourage you, so we're not attacking anyone, obviously, we're trying to help, but is that that's going to be compounded, man, and that's you're going to pay that over that period of time. Also, other things, you know, you speak to, and I know it's a bit off topic, but is around like we're not advising you around interest rates and you know
Yes.
what to do there and those sorts of things. We're just trying to inform.
Correct.
But it's
Correct.
things like, maybe we should chat about it another time, but it's things like balloon payments
Yes.
with cars, and you know, higher interest rate environments now, balloon payments are becoming more and more prevalent because higher interest rate equals higher repayments.
Correct.
So now suddenly I've got a balloon payment and now it's more affordable. I mean, it's what?
You can buy a
the top
nicer
of
car.
MoneyWeb, there's 96 on MoneyWeb's app today. The most read article so far is a 96th month car financing term
Yes.
now.
That's unbelievable.
So it also speaks to like maybe the pressure people are under.
No, for sure.
So helping
for
car
sure.
sales, affordability, and
I think the other thing we didn't mention is investments and savings.
yes,
So in an increased interest rate or lending rate, sometimes that's helpful because your fixed deposits, your cash
such a good
managers
point.
have increased. They're not, you know, we're in the current market of it. I mean, you can get, you know, high interest rates now for putting money in the bank.
Yeah.
And so you can take advantages of those things where
So it's not all negative.
It's not all negative.
Yeah, you can win from it, eh? You can win.
And it depends where you are on that curve of your financial plan. Or and I love the point you said. You know, we financial planners, but we also have the same things to navigate.
Yeah, we're also humans.
We also got to buy houses, buy cars.
Also make bad decisions.
We do, and that's okay. But when you learn from those decisions, so we speak about it because we want our listeners to understand where we are, you know. And
so Granty, so we're going to wrap up, but maybe on that point, predictions.
Predictions.
Okay, let's put your head on the chopping block now. So SARB, we're not going to speak US, okay?
Yes.
Because that's a whole nother kettle of fish. I hope they don't spook the market. Okay, let me leave it at that. And I don't think they will. But let's speak about SARB.
Yeah.
Thursday. What are you predicting?
I think 25 lips. I think it's going to be
me too.
I don't think. It would be. I mean, just my opinion. I think if it goes higher, I'm just going to say it. If it goes higher, I think it would be considered a panic, or like it'll be. So I mean, it's
I suppose you could have someone who could argue for 50 bips, a 50 bips cut, because you know, oil price where it's at, it's been really stable. It's been around that $70 mark for a long time now. You know, you look at the US and a bit of recession fears. You look at kind of, I know from an oil reserve point of view, all of these factors. There's definitely a camp that will oppose us. And they'll say, no, there's space to cut at 50. But I'll be comfortable with 25. And I think the trend will be our friend. Another one in November.
Trend will be our friend.
Okay, let's do it. Lesejo, if you're listening, 25. We're sorry if we're offending anyone's 50. But there's also next year, right?
There is.
Cool.
And I think it will. I think it's gonna slowly. Bank out its way.
And you know what? I think let's back the team a bit. Let's give them a chance to kind of unwind and go out of this hiking rate environment to go into this kind of cutting environment. But thank you, Granty. Thank you for sharing some of your knowledge.
Number 2.
Thank you, guys. Thank you for listening. We really appreciate it. It's so good to get to sit with you guys again. I hope you guys found some value, and we'll see you for episode 3 from our Toyotas. Thank you so much for joining us on this episode of the Spry Guys podcast. It was so good to have you here with us. Don't forget, before you make any sorts of financial decisions, chat to your financial planner. He'll help you, or she will help you, make an informed and objective financial decision. We'll see you guys soon. Join the journey.